Good morning, I'm Di Brown. I'm a Chartered Accountant and Business Advisor with SRJ Walker Whalen, and today I'm going to be taking you through a 10-step process to ensure you are best placed to start a successful small business. So my passion is education, and educating small business owners such as yourselves on the importance of planning for success and working with you to develop detailed strategies and action items to help you achieve your growth and profitability goals. So today, we are going to be working through the 10 steps to help you ensure you are best placed for small business success. So step one in any small business startup process is to ensure that you do your research first. So per the ABS data in 2019, we had over 2.1 million small businesses in existence. And unfortunately, over 60% of small businesses will fail within the first 3 years. So how do you ensure that your business is not one of those and your business is one of those that are best placed for longevity and sustainability? And the answer to that question is research and planning. So step one in doing your research is complete a feasibility study. So what is the estimated demand for your product and service? Who and where are your customers? And who and where are your competitors? What are the barriers to entry for you entering this particular market? And what's your sustainable competitive advantage? And bear in mind that your sustainable competitive advantage is unique to you and your business. It's what makes your clients and customers use your services. So it's specific to every organisation, and every organisation will have a different sustainable competitive advantage. And knowing what yours is and how to reach your customer profile by mapping your sustainable competitive advantage to your client base is important in achieving your success. So in terms of doing your research, research your industry. So what are the key characteristics of the industry in which you're about to enter? And where do you fit within that industry place? And there's a number of different resources that are available to assist you with that research. And at the end of my PowerPoints today, I'll have listed a whole heap of different sites that you might want to go and visit to help you do your planning and your preparation for your new small business. So in terms of your research, there's a couple of great sites available. Business.gov.au has some industry fact sheets that are very useful. ibisworld.com also has some excellent reports, and also benchmarking.com has some excellent industry information. So I'd suggest that you arm yourself with as much industry and market knowledge as possible. Once you've done that research, you need to test the market with your product or service. So you can do this in a number of ways. You could have focus groups, you could have Facebook polls or surveys, and one of the really good ways to test the market is to attend trade shows, particularly if you're releasing a new product as opposed to a service. Trade shows are a great way to get feedback and potentially start your first customer base from attendance at those shows. So once you've done that, you need to start thinking about developing your strategic business plan. So what is strategic business planning? It's simply a process that we apply to provide direction to your business. We identify your goals, we break those goals down into strategies and action items, and it's one way to keep yourself accountable to achieving your goals. If you map that strategy into identifiable actions with allocated responsibilities and timelines, and have someone assist you with that implementation guidance in terms of keeping you on track, you're more likely to achieve your goal success. So your strategic plan should not be a set and forget document. It is an evolving document that you need to be revisiting and updating on a regular basis. Why is a strategic business plan important? Because it provides your business with direction, clarity, priorities, and actions. and it becomes your blueprint for your business success or your map to achieve your business goals. Additionally, as a startup, at some point you will be required to obtain some sort of external funding to help your business either get off the ground or kickstart it into a more, or scale up, I should say. So at that point, you might be required to provide a business plan for financing, and whether that's to investors, for grant funding, or for traditional financing arrangements such as banks, chattel mortgages, etc., you will need a business plan for those finance applications. So develop your strategic business plan. Define your purpose. Define your product and service. What do you do and why do you do it? What need are you addressing in the market? Develop your sustainable competitive advantage and complete a strategic business SWOT. So a strategic SWOT is your strengths, your weaknesses, your opportunities and threats, but it's also about taking that SWOT to the next level and looking at ways that you can use your strengths to capitalize on your opportunities, use your strengths to overcome any threats, and use your strengths to ensure that your threats don't combine with your weaknesses to stop you achieving your business goals. Develop your path to market. Define your goals, make sure they're SMART, so specific, measurable, achievable, realistic and timely. Develop your action plans, and most importantly, hold yourself accountable to achieving those goals. So once you've worked out your plan, you need to figure out what business structure is going to be most appropriate for you to achieve that business success. And there's 4 key types of business structures. There is some great resources again on business.gov.au that gives you some basic information on your business structure. But I would certainly recommend at setup that you engage some independent expert advice in terms of ensuring that you have the structure that's most suitable to help you achieve your business goals. So the 4 key structures that we usually use in the startup world will be a sole trader or an individual, a partnership, a company, or a discretionary trust. And there's some advantages and disadvantages to each of these different structures, and this is why it's really important that you get independent advice to determine which one is the most appropriate for your business. If you're considering being a sole trader, that's great, where your income levels are very low and you're in the startup phase. It's simple, it gives you full control, but the downside to operating as a sole trader is you become personally liable for any debts that are incurred in the name of your business. So there is risk associated with that structure. The same goes with partnerships. Again, in a partnership situation, it's relatively simple to set up. You are able to distribute profit and losses in accordance with your partnership agreement. However, with a partnership, all partners are deemed to be personally liable to any debts that are incurred by that partnership. A company is a more complex structure. It has limited liability, so it's less risky. However, it's more complex because it must comply with the Corporations Act of 2001. You're unable to distribute losses out of a company structure. They're effectively trapped in the company until such time as the company makes sufficient profit to utilise those losses, and there are specific loss rules that must be complied with in order to access those losses down the track. A discretionary trust is a widely used small business structure, particularly where the trustee of that discretionary trust is a corporate entity. If you have a corporate trustee, again, it will give you some asset protection in the form of limited liability from that corporate trustee. A discretionary trust also allows for flexibility in income distributions. However, again, similar to a company, losses are trapped in that trust and subject to trust rules, and it's slightly more complex to comply with relevant trust rules. So there are advantages and disadvantages to each of the different structures, but they are the four main structures that you might want to consider when you're setting up your small business. Step 4 in establishing your successful business is to make sure that you obtain appropriate registrations, licenses, and insurances. So this means ensuring you have an ABN and a tax file number. In the business world, if your turnover exceeds 75,000 or expected turnover, you're also required to register for GST. You will also be responsible for pay-as-you-go instalments, which is the tax that you will pay on your business income. If you're employing staff, you will be responsible for pay-as-you-go withholding requirements, superannuation guarantee contributions, and you will also be required to ensure you can apply with workplace health and safety legislation. It's important that you ensure that your business name is registered. There are some rules around what type of business names need to be registered and what doesn't. So again, I would ensure that you got advice with respect to registering your business name. You might also want to consider some IP protection, particularly around any trademarks, trademarking any logos that you might want to design. And most importantly, and one that a lot of small business startups seem to forget, is to ensure that you register your domain name, which gives you secures your website address. The other thing that you need to consider is your appropriate insurance cover. So some specific ones to think about are your asset insurance for your business assets. You need to consider public liability insurance, professional liability insurance, business interruption insurance, where you can't trade, for example, for something such as COVID. Product liability insurance, key person insurance is critical, particularly if you are a small business or a sole trader, etc. And you also need to consider your industry-specific licenses. And again, there's some good advice around those on business.gov.au. The next critical step, and one that is often deemed to be one of the more difficult by small business startups, is planning your finances. It's critical, particularly in the first 12 to 24 months of trading, that you have a detailed financial plan. So what does that look like? It means developing a startup budget. So what do you think your estimated costs are going to be in that first 12 months? Determine what capital commitment or contributions you're going to be required to make to ensure that you're able to trade out that critical first 12 to 24 months. And the way to do that is to prepare financial forecasts. So ideally, we like to see financial forecast profit and loss statements, balance sheets, and most importantly of all, that critical first 12-month cash flow forecast to ensure that you have sufficient cash coming in to be able to pay your debts, your suppliers, and your expenses when they're due. Additionally, in your financial plan, you need to begin determining your pricing strategy. So there are a number of different pricing models that you might want to consider, but at the very least, you should be looking at what your competitors are pricing, what your costs are, what margins you need to be making to achieve your profit goals, and maybe work with your accountant to develop your pricing strategy. It's critical that as a small business startup, you know your break-even point. So your break-even point is that point where your sales cover all of your operating expenses and your gross margin. And it's not until you've reached that break-even point in sales that you actually start to earn a profit. So you need to know what your break-even point is on a weekly basis so that you can be tracking that you're getting enough income in to ensure that your expenses are covered and that there will be some profit available for yourself. Identify and monitor both financial and operational key performance indicators. So there is some other learning modules that we have recorded for Business Moreton Bay region that takes you through the importance of financial literacy and small business financial management strategies, where we go into pricing, break-even point, cash flows, and all of those critical financial things you need to be familiar with in that first 12 to 24 months. I'd highly recommend that you jump onto Business Moreton Bay region and have a look at that learning module. Step 6, you need to set up your record keeping and accounting systems. And you need to get these systems in place correctly from the start, because it's much easier to get things set up correctly the first time than actually try and unpick your transactions and get it in place as you start to get bigger. So get it right the first time. It'll save you a lot of time and a lot of money. So some things to bear in mind. From an Australian Tax Office perspective, you need to ensure that your records are kept for a minimum of 5 years, preferred electronically. However, the 5 years is from the date that the transaction is completed, particularly if there's any CGT events that are happening in there. They're preferred to be maintained electronically. You need to set up integrated systems. So what do I mean by that? It's a great idea if you have something such as a cloud-based software system where you can track your income and expenses. Xero and MYOB are two excellent systems that would allow you to do that. Most of the cloud-based systems have integrated modules where you can add in things like your timesheets, your customer relationship management systems. Receipt Bank is another thing that you might want to consider, which allows you to take a photo of all of your receipts, upload it directly into your small business accounting software. You also want to consider the integration of your job management or project scheduling system, depending on the type of your business. So again, we've designed a learning module, Small Business Accounting 101. You might want to go and have a look at that learning module for Business Moreton Bay region if you're considering implementing an integrated accounting system. Another thing you need to consider as a small business startup operator is developing and documenting your systems and processes. Can't stress again how critical this is, particularly as you start to get larger and you need to bring in staff. So it's important, if you're thinking about being a sole trader, that you are able to have someone come in and replicate what you do in certain areas of your business, because there will come a point where you won't be able to do it all. And the best way to protect yourself around that is to develop documentation, policies and procedures around what you do as you go through your business. There is a fantastic free resource that is available for Queensland-based businesses through the state government. It is called the IPAM program. IPAM stands for Injury Protection and Management. And I've listed a resource on the resources pages. It will help you implement and document your workplace health and safety systems in a lot of occasions for free. So please go and have a look at that free resource that is available for you. So step 7, it's really important as a small business owner that you know and understand how to comply with your tax and legal requirements. So income tax, the way you pay income tax will depend on the type of business structure you have chosen. So for an individual, for partnerships and for trust distributions, a partnership and trust distribution is distributed out to the relevant either partners or trust beneficiaries. And if they are individual partners or beneficiaries, similar to a sole trader, the income tax will be paid at the individual marginal rates. Companies have different tax payable. As a small entity, you'll probably hit the 26% mark. Depending on the size of the company, that will change. However, initially the changes come in and it will be 26% from next year. If you employ staff, you will be responsible for pay-as-you-go withholding to be remitted on your business activity statement. You'll also be responsible with complying with the superannuation choice rules, superannuation guarantee contributions that need to be made for your staff. You need to be ensuring you're complying with relevant industry awards and that you're submitting your business activity statements when they are due, which depending on your size will be either monthly, in the majority of cases quarterly, or even annually if you're a very small business. If you are a company, you also need to ensure that you are complying with ASIC requirements and your director's duties. So once you've nailed your tax and legal obligations, you need to think about the team that you are going to need in place to support your business success. So what skill sets do you need to develop as an individual to achieve your business goals? What gaps do you have in your skills at the moment? And how are you going to address those gaps? Do you have capacity and the capability to address those gaps? Or will you bring in independent experts, either as advisors, contractors, or will you engage employees to undertake some of those tasks? So one of the key recommendations I would suggest to anyone considering starting a small business, seek help early. There is a lot of free resources available. Business Moreton Bay region is a great example with their workshops, with their learning modules on a whole heap of different business related topics that are available for free. Work with business mentors. Again, there's some free mentoring programs that are available through the state government. Work with your advisors. So develop a relationship with your accountants early. Work your network. So who are the key industry associations in your industry? Join them, attend their events, learn from others in your industry. But get yourself out there, get yourself educated and informed as early as possible. Develop your marketing plan. So ensure that your marketing plan is directly related to your business goals. And this means defining your target market, defining your client avatar. So what do I mean by that? Your client avatar should represent the key characteristics of the clients that you are trying to target. For example, if you are a service business and you have decided that you are offering a service to the legal profession, what type of law firm are you targeting? What's their turnover? How many partners do they have? Where are they located? So define your client and approach those clients that only have the key characteristics of who you want to be your clients. Who do you want to work with and why do you want to work with that particular set of clients? Think about why that particular set of clients needs your product or service right now. What need are you addressing? What problem are you going to solve for those particular clients? And more importantly, think about in your marketing plan, how do you reach those clients? Is it through LinkedIn? Is it through Facebook? Is it through Google Ads? Is it through networking events? Is it through direct approach? Is it through warm introductions? But your marketing plan needs to be considering how you are going to reach your key client avatars. So it's important with your marketing plan that you have a marketing budget. It only needs to be small and that you work within that marketing budget. So ensure if you're going through social media channels such as LinkedIn, Twitter, Facebook, etc., that social media channels ideally want to direct traffic back to your website, where people have the option to see more of your capability that is displayed on your website. Track your return on ad spend. It's amazing to me how many clients pick a figure and say, I'm going to spend $1,000 on Google Ads this month without actually working with a digital marketing expert to work out, well, what is the return that has been generated on that Google ad spend? So it's really important that you are tracking your return on that advertising spend. Use things like LinkedIn, industry journals, speaking engagement at various industry events to develop and prove your capability. So show people that you know what you're doing, that your product does achieve what you say it's going to achieve, and build your capability through those various channels. Step 10, think about how you're going to launch your business. How are you going to launch? Where are you going to launch? When are you going to launch? And who are you going to invite? At a minimum, you want to have your key stakeholders at that event. So that is your finances, if you're going down your financing track, your potential key suppliers, your potential key clients. They are your key stakeholders for your business. Obviously, any employees, if you are going to have them. All of those people need to be involved in setting up and launching your small business event. So I've given you 10 key steps to follow today to help you ensure your business, your startup business, is best placed for success. There is a number of resources that are available through the PowerPoint that I have on the screen. I would suggest you have a look at the various websites to do your research and get further information ensuring you're best placed for business success. So thank you for your time today. Remember the 10 steps to start your successful small business, and I wish you all luck and hope to see you around the Moreton Bay business world. Thank you for listening.